Good afternoon, good evening, good morning, depending on where you are in the country, around the world. My name is Antonio Cheeks, and I am here with Mr. Douglas Aze. We both are representative of Largo Financial Services. As a matter of fact, my man, you are the CEO of Largo Financial Services. So I'm honored to be sitting here with you and honored to be a part of your team. And we're both also a part of the American Classic umbrella.
Right.
And so this is really cool to be sitting here with you. Thanks for taking the time out. Douglas, I had to tell you, man, I've only really been in the industry for a few years.
Right.
And you trumped me on that because you've been in the industry for, is it 20 years
20
now?
years.
20 years. Wow. This is interesting. We did a video earlier with you and your road to success. And so for those listening, if you haven't seen that, I'll actually link that in the bottom of this video so that they'll hit that. So I just thought about that. So we were here at the office and you decided to come in and sit with me and talk a little bit, and I'm glad you did. So I got a couple of minutes. I want to go, if you don't mind, just a couple of questions that I have about the industry.
Cool.
Number one, again, thanks for coming in, man. I really appreciate it because I know you're busy. You know, you flying around and stuff like that. So when you do come in the office, everybody's trying to get at you, and I happen to stay a little later, and you say, hey, I got a couple of minutes for you. So that's all I'm going to do is take a couple of minutes.
All right.
So I want to talk to you about something I'm seeing in the industry, and that is what I consider to be an underserved market.
Right.
And that market is young professionals, young high-earning professionals that are really trying to figure out what to do with their finances and, more importantly, what to do with the amount of taxes that they're being hit with.
Yeah.
I hear it all the time. As a matter of fact, most of the clients I have, and it's funny, I didn't think it was going to be that way, but most of the clients I have are actually young professionals with high-earning income, and they are getting taxed all over the place.
Right.
And but we know, you and I both know, that one of the foundational things we need to have in our financial service planning is life insurance.
Right.
And just as I said that, we probably lost half of the people that might be watching.
Right.
But I don't know why that happens, but why is it that why do you think or feel that this market is underserved and they don't look at life insurance as part of their market or their planning?
Well, the reason is most people believe that life insurance is just for death.
Oh, okay.
They just believe, I'm buying life insurance to die. And the media.
Okay.
Because most Americans listen to the media.
Gotcha.
Whatever the media says is what is gospel.
It's not fake news?
Yeah. I know, right? So,
oh my God.
The first step for you to grow your financial world and your wealth is making sure you do stuff outside the box or watch what the wealthy families do, which is what I decided to do.
Okay.
As a financial planner, when I first got into this industry, I went ahead and I got all my licenses. But then I wanted to research what are the wealthy families doing that is different from everyone else.
All right, I hear what
you know what I'm saying?
Yeah.
So basically, that taught me a lot.
Okay.
And I realized that the media, the banks, and the government are all working hand in hand.
They're all feeding each other.
They feed each other.
Okay.
And if whatever it is, the government, what they do is they want to make sure that when you retire, they want you to come back and depend on them.
Okay. All right.
Right? Yeah. So if you depend on the government because you have no money, then you have no voice.
Okay.
So it's a system that most Americans don't realize that's what's happening. So what do they push? They push the 401k market, and tell you to defer your money till you retire.
That's a good point, because in our next segment, called Getting Out of Debt, we're going to really dive into the 401k market. And I know there was a 60-minute video that was out a few years back that talked about what happened with 401ks.
Right.
Could you briefly talk to me and people that are listening about the history of insurance, because I think people don't even understand that.
Right. So life insurance, when it first started, it was created, first of all, term insurance.
Term insurance. Okay.
Term insurance was the first type of life insurance that came out that was ever created.
Okay. I didn't know that.
It was a 1-year term.
Whoa. Okay.
1 year term.
This when people would knock on the door and stuff.
Right. It was a 1-year term, and the guy died. So the insurance company had to pay out the money.
Oh, okay.
So he bought a policy to protect him for 1 year.
Okay.
And he dropped dead.
Oh, that's a. I mean, it's a sad story,
right?
But
his
it was
family
a great
got
payoff.
paid for his family.
Right. Mm-hmm.
So the insurance company paid out, So, but later down the line, as you continue to evolve, what happened was a lot of people weren't buying life insurance.
Okay.
Because it was a situation where it only pays when the person dies.
Okay, so they didn't see themselves.
They didn't see themselves doing it. So most insurance companies are very smart. That's one thing. They're very, very smart. So they went back to the drawing table. And this is one thing I always teach my agents. Okay. You know, insurance companies are what they call a manufacturing plant.
Got you. Okay.
Just like a car dealership, a car manufacturer,
like Ford or somebody like that.
A BMW manufacturing plant.
Right. Okay.
Right. So they manufacture products.
Okay.
So they went back to the manufacturing house and said, "Listen, these guys are not buying insurance. These consumers are not buying insurance.
Right.
They're not buying it because they're like, if I die, somebody else gets the money.
Yeah,
so I don't care.
What's in it for me, right?
Wasn't it for me? Nothing. Okay. You know, I don't love her, right?
Right. I'm not going to take care of that kind of stuff.
They don't care. So they said, well, why don't we give them something?
Okay.
Let's go after the human being greed.
Oh wow!
Because human beings are what? We're greedy by nature. I mean, I'm just keeping it real, right?
Right.
We all wasn't it for me?
Right.
So they came up with a product called Whole Life.
Okay.
So Whole Life, Paul, they said, listen, if you die or if you're living, you could take cash out of the policy. But they designed it so well that it has a lot of benefits.
Oh, okay.
So that came out, and they started selling a lot of life insurance.
And it started evolving.
It started evolving.
So let me bring that back around, if I may, to with that, talking about how they changed up the policies and the way insurance was actually now tuning into that radio station WIIFM.
Yes.
What's in it for me?
Right.
And which everybody wants to know. How does, when I talk about high earning young professional, when I say young, I mean, early 30s, 20s, early 30s, and 40s. People are making a ton of money.
Yeah, they are.
And they're single professionals trying to figure out, what do I do with this? They're happy that they have the money, but they're seeing their taxes being hit hard in taxes. So how do someone in that situation use life insurance to kind of like reduce their taxes either now or in the future?
Yes, so what you do is this. It's not, we can't get away from taxes, right?
That would be illegal.
Right.
Handcuffs,
right.
everything going
all
okay,
that.
Right. Okay.
But there's a lot of strategies that we can teach on how to minimize the taxes, depending on the person's income.
Okay.
But just to address the quick one that a lot of people make the mistake on, which is they're postponing the taxes that they want to pay today.
So postponing, is that another word for
deferred?
Okay.
Deferred. So like, for example, you make $100,000 a year, right? So you're saying to the government, listen, I want to contribute to my 401k. So I don't want to pay taxes right now on that money.
Right.
I'm going to pay it in the future.
Oh, okay.
So the government says, go ahead and do that. We're going to tax you in the future.
Okay.
So that's a way for the government, because they're going to always be here, right?
Yeah.
So in the future, when you decide to retire, now you got to pay taxes on all that money that you deferred.
Okay.
So that's a situation. So my thing is, why don't just pay the taxes today? And then get the money that you're going to contribute later in the future, tax-free. So what we want to do is show you how to, one, protect your family, and then also put money away so that in the future, or even before the future, you need to pull money out. You don't have to be penalized and hit with taxes. Now, the other option that we show, which is something that we do with a lot of clients when they come in one-on-one, where we show them how to minimize
the tax,
the amount of taxes they're going to get hit in their income.
Right.
So there's a way that we can show them when they come into the office. We show them, let's say a person making 6-figure income.
Right. And a lot of them are doing that nowadays. Yeah.
So instead of, and I'll use $100,000 as an example.
Sure.
So instead of getting taxed on $100,000, let's say you make 100 and you're I'll just use a 30% tax bracket.
Okay.
That means you're gonna pay $30,000 in taxes.
Absolutely.
So now you walk home with $70,000, right?
Right.
But there's a way that the government allows you to take the 30% of that money and put somewhere else before taxes.
Oh, okay.
Yeah.
That
and
might
only
be
get
something.
taxed on $70,000 instead of, and then you could still use that $30,000 that you were able to put away in an account and let that money grow tax deferred and tax free.
Tax free. This is interesting because a lot of people see people in TV or in the news, and they always talk about how little taxes they pay.
Right.
And sometimes people get upset about that.
Yeah.
But they're not really doing anything illegal.
No, they're not. I mean, we have a president that didn't pay taxes.
So you got to learn how to play.
You just got to know the rules
of the game.
You got to know the rules of the game.
Yeah, okay.
You know, most financial advisors don't take the time to understand the tax rules.
Okay.
So what I did, I was fortunate enough to have a mentor that taught me, strategies that helps my clients minimize taxes.
Okay, this is good stuff.
Yeah.
This is good stuff. So let's shift a little bit and talk about how, and I know we had spoke earlier about some people don't even realize how people have used life insurance for building wealth.
Oh yeah.
I had mentioned J.C. Penney's when we had the Great Depression,
right.
And for him to survive and make payroll, he used life insurance to keep his business going. So it wasn't about a death thing as well. But there's somebody in particular you told me that a lot of people don't know about, and that was Disney.
Yeah, Walt Disney.
Right. Tell me about that.
So with him, he wanted to start his business. Disney World, right?
Right. We all know it now.
We know it.
Okay.
So he wanted to start that, and nobody would give him money.
Because if you had a dream,
you need money, right, to fund your dream.
Absolutely.
Which happens to so many people.
Yes.
So nobody will give him money to do it.
Okay.
But he had a life insurance policy.
Really?
And he was able to take a loan against his policy for $100,000.
Wow.
To start Disney World.
Okay. Okay, man, you tripping me out here. So are you saying that somebody who has dreams, but let's say you don't have really great credit, or you've been trying to get finances for this vision that you have, if you had properly structured your life insurance policy, you could fund
take
your
the
vision
money to start a business.
All right.
You borrow against it, which is something we teach. Now, I wrote a book, right, called Creating Generational Wealth.
All right, we're going to bring that on the show, on this podcast next time. We're going to show people the book.
Right. So, and in my book, I talk about how I've used life insurance to start a medical practice.
That's right. You do. Okay,
yes.
That's good.
So I did it. I use life insurance for a lot of stuff. So for a young professional, because when did I start my life insurance? I was 26 years old when I first got started in life insurance.
There's a lot of 26-year-olds ain't even thinking about life insurance.
They don't think about
it. Okay.
But I started because I was in the business, which I understand why they don't do it, because they don't know.
Right.
But because I was fortunate to be in this business, so I was educated about it. So I started putting money in my life insurance contract, which helped me when I got married.
Okay.
To be able to start a medical practice.
Okay.
For her. Because of that.
So you had freedom.
Exactly. Okay. I was able to get a loan for my policy and loaned it to the clinic.
Wow.
See that? So now the clinic pays me back at an interest rate that I charge to the clinic.
No stuff.
Yeah.
All right. This is good stuff. So I hope you've been enjoying this information. We don't want to make these videos too long.
Yes.
But unless you ask for it to be a little bit longer. Here's a couple things. In the description box, if you have a question that you'd like to ask us, go ahead and chat that, put that in there.
Or just send us an email.
Send us an email.
That's easier, right?
We can do that?
Yeah.
All right, send us an email, and and we'll go ahead and answer that question.
So send it to info, right?
Yeah.
At lagofinancialservices.com.
I like
info at lagofinancialservices.com.
You know what I'm going to do?
Questions that you have.
I'm going to put that on the video here.
Okay.
Matter of fact, it's going to come up right
now.
There it is right there. And so, hey, thanks for tuning in. When we get back together again, can we talk? First of all, I want to bring your book up so people can see that. And can we talk about how people are using, you know what? Let me keep it a secret. Can we talk about getting out of debt without spending any more money than you're spending currently?
Yes.
In 9 years.
Man, that's awesome. That's an awesome.
And can we say including your mortgage and student loans?
Big time.
All right.
We might even show some examples of people who've helped.
Can you do that?
Yeah.
All right. So we'll do that. So hey, look, thanks for tuning in. This is our first inaugural launching kind of like podcast YouTube thing. So if you like it, comment below. If you haven't already subscribed to any of our web channels, go ahead and do that now so you won't miss an episode that's coming out. And look, we look forward to talking to you real soon. And we don't even know what we want to call these videos or these podcasts right now. So if you have suggestions, let us know. If you have to put it in the box, let us know. Email it to us, and we'll take those and see which one wins. Maybe there'll be a contest.
Yeah,
you know what? How about the one that wins? We give we'll think of something to give.
Okay, cool.
Make it a contest and give away.
So
we're looking for a name to call these videos. So
right.
The winner will get something as a gift, and it will be a nice gift.
That's
good.
That's good.
All right. Hey, thanks again. This is Antonio with Mr. Douglas Aze of Largo Financial Services.
Thank you.
And we got a video coming to you real soon. Thanks for tuning in.
Thank you.